Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Tuesday, May 7th. Today, we don't have any economic data this week. This entire week is light on economic data, but we have some things to talk about on the economic front. The first thing is that used cars month-over-month and year-over-year on the April, it's still on the negative. This is lowering prices. And RSMT economic optimism index, it's going lower. From the 43, we were expecting an uptick to 44, but we got an impressive 41, so lower than expected. And the main thing today, apart from these two bill note actions that are still showing that we have still a lot of yields caution instead, even though the 3-year is even higher. The big thing today is that Fed cash carry, it's saying a little bit of things that are concerning, or a little bit some defensive and not optimism, and the same optimism that market is showing. Kaskari is a member of the Fed that has no votes, so it's not super important. What he says is not super important for the FOMC, but it's a Fed, and also he usually wants to talk with the media. And what he said today is basically that he's seeing inflation stalling and not progressing. So we should be holding rates until longer. That's the same thing that markets are waiting for. It's the same thing that the Feds are saying, but the markets today are taking advantage of no news to just a little bit of a pullback to the downside. We are not seeing huge selling pressure. We are not seeing huge levels being broken, but that's true is that during the yesterday's push higher at the end of the day, this is the final 30-minute of the day yesterday, this is the range. So during overnight, we were just chopping into the open. We tried to go higher, but we got rejected. So we are right now at the same range of where we were during the overnight. So nothing has changed, but that doesn't mean that we don't have opportunities, because let me just show you the trade that I took today. It was not my usual setup, but it was certainly something that I would like to share with you, because sometimes these levels are pretty important. On the 30-minute chart from yesterday, we got the last big candle of the open. This is called a late spike, and this late spike has the pivot here with this yellow dashed line. And taking that into reference, look at how we set up during the overnight. During the overnight, we open up here. This is the London Open, and we start going lower with patience. Everything sets up properly. And this is the first time we touch this zone. We got this placement in the 1 minute here and also in the 5 minute here. So if we watch the 5-minute chart, we can see that there's big displacement here, but we never got a decent pullback to manage risk as I usually want to see. And we push higher. We took the overnight highs at that moment and we dumped again. At the same time, this was the not a lost opportunity. It was not the proper setup for me, but we were leaving behind on the second pullback, this 5-minute, and also a 15-minute inverse fair value gap that it's going to play a key pivot into the open. Because look at this inverse, how we played into the open, holding it. And this move higher would have been great to take. But let's talk about this 5 and this 15-minute into the second bounce on the same level, because we took the liquidity, we touched again, and we pushed. And at this point, this was the second time that I was watching this level and it was holding. And I said, okay, just throw me a little bit of imbalance. So we got this 1 minute inverse fair value gap from here. Sometimes the displacement higher doesn't provide you with a bullish fair value gap, but this inverse if we hold, it's more or less the same. It's not exactly, it's not an A plus setup, it's maybe a B, but we can manage our risk with the first candle that touched on the bull side, and a stop down here was basically my setup. 10 points of risk, 3.63 risk reward ratio, and the target was pretty clear. Look at all these. This is yesterday's high. Look at these pre-market highs, and these move higher. I mean, this level at 18,200 was pretty damn good. And that's what we did. We displaced, we grind higher, and we took. And that's 36 points. It's not a super trade, but this is more than enough for you to manage our risk, to have patience, and to be how is it called? Sustainable, to be profitable. You don't need nothing else than 600-700. It's pretty damn good for a day. So I was watching the open, and during the open, as always, when the big target is met, basically I was watching this. Let's go to the 1 hour, because this order block here was pretty interesting. This order block on the blue line, the rectangle with the blue dashed line, and also this liquidity at 18,350. So basically, we were at that level the entire open. We tried to go higher, and look at all these people shorting. So this level up here was super far, and we just couldn't continue higher. I think buyers, and the volume, it's not super good. The open was 16,000 contracts. It's not super brutal on volume, but just overall, it's just a range day, same as yesterday, because there's no news, there's no catalyst for us to move neither higher nor longer. There are opportunities for sure, and during even the overnight, we have opportunities, but there's nothing trending. And that's when you have to really sit tight and wait, perhaps for better opportunities other days. So remember, this range, it's what it's all about today. We are just in this upper part, 18,183. These two taps need to hold. This is the only thing that I need to see today before close. I would not like to see market go lower into this liquidity or into this order block on the 1 hour, because we have an order block down there from yesterday. This order block, it's quite important also. This is also important, so perhaps something like this would be nice, but we need to hold these levels in order for us to continue higher and to really see how we are basically trying to go higher. Let me just clean a little bit now that let me just remove this, remove the trade, remove the balances, just to see the liquidity. Okay, this is clean enough. So on the daily, for a forecast for tomorrow, look at this candle. Let me just clean everything. This candle, it's, I mean, we have 1, 2, and 3, a big move, and then I expect some kind of pullback. Where? That's the key thing that you have to understand. Look at this void on volume. We have from here, that is the point of control of the entire range of this range. The point of control is up here in this big volume. And also look at these candles. So it's obviously that we are finding resistance here. It's not just random. We are at a point of control, at a point in the chart in which there will be a lot of sellers and a lot of volume going against our move. So I expect a move lower to where? Well, we have quite clear this daily fair value gap and also this inverse. So we have both trying to set up here. So let's remove this. Let's remove the golden pocket. The order block also played its role. Let's leave this 1 hour for the pullback during the overnight. And let me just real quick tell you what I will be watching for tomorrow. So this is the daily inverse. This 30 and this 15 are already done. This 30, this 1 hour, I mean, everything down here should not be revisited for now. And we have also this bullish fair value gap. So in these two situations, we need to be patient for tomorrow. I expect tomorrow a pullback into perhaps this fair value gap, and that would be great because then we can find better opportunities into all this range. This range is huge. It's below 18,000 psychological level, but let me explain you why I think it's a good setup. Because this gray area on the bullish fair value gap, if we check the fib retracement from this range, look at where it sits the 50% retracement. There's also a 1 hour fair value gap here that I wouldn't mind buying. So basically, this is the 1 hour and it's a good setup. So if we start going lower, don't panic because this will be the zone. But honestly, this will be the zone for you to buy. I would buy here. And that's the kind of pullback that I would like to see because we can manage our risk here, down here, also in the golden pocket. I feel safe down here, managing my risk. And if that doesn't work, we have a stop down there. But buying up here with this kind of thing, when we are trying for 2 days to squeeze higher, I mean, buying, it's not super strong. We have to really pull back for other participants to join in. On the dollar, we are seeing a little bit of push. So remember this buying tail that formed on the daily, we are seeing continuation into this volume imbalance. We have this pivot, this inside this range is just super important. If dollar goes through, I would be way more cautious on stocks. The yields are under control. I think we are seeing this is an order block on the daily. I think we can see more continuation lower. This is a big area for the 2-year yield. Actually, let me just put in here. And also, I think this needs to have. So basically, this blue line below 4.8 on the 2-year yield needs an alert. And I think it should be quite important. Let me just see, crossing, okay. And the 10-year yield, it's also setting up. So if we don't hold these areas on the yields, we continue lower, we might see some small caps pushing higher, but the dollar needs to weaken further. I don't want the dollar to continue higher and reclaim those levels. And apart from that, it's pretty boring day. Nvidia is 2.38%. And look at this buy-in. Look at this buy-in. Nvidia was gapping down like crazy. Let me just show you. Since the open, we were 2.57. And I mean, this buying tail, it's quite important because it shows you the volatility of this stock. And on the daily, this is quite impressive. Quite impressive. So Google, it's the only thing in the green trying to push higher, and also Apple that has some kind of event today. But overall, mixed sentiment on financials, and small caps are barely moving. It's quite mixed sentiment today. It's a mixed bag of risk on, risk off. And I don't know about you, but this is a pretty boring day, and I wouldn't trade anymore today because I think we are almost flat, 0.13 in the red, and ES is actually at 0%. So I mean, I don't think this is worth anymore for today. We still have to wait for tomorrow and more days in the week. I would wait for that. Honestly, how about breath? Breadth is just continuing higher. That is good. At least we have some activity on the background pushing higher, and the RSP it's actually in the red. But this momentum on the 20-day moving averages, the percentage of stop at almost at 70% and breaking this kind of resistance, it's quite good. So breadth is increasing, it's improving, but on equities and stocks, we have a mixed bag. And I think we have to exercise patience and discipline. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day. Let me just show you my setup for tomorrow. Every single day for market forecast, market updates, and market recaps. I appreciate your time as always. Remember that the trading day is not over yet. Today is quite boring, no volume, lack of liquidity. I think the effort should be done on days better than today. Today is just not worth. Let's see tomorrow. Discipline, patience, risk management, it's the key for your success. Don't forget that. Stay safe, everyone, and see you tomorrow.